Good afternoon, guys. Welcome back to another video. This is a weekly analysis video where we discuss the Nifty's price and time structure. Now, I'm recording this video on a Monday. This is not a weekend actually. So today, this time we did it a little different because I wanted confirmation. We had budget, right? Saturday session budget we had, and price structure of the day it closed. If you see, it's very clear. Market had a sharp fall, correct? It had a sharp fall. After that, what happened? After that sharp fall, if you see, there was a very let's say volatile session. After that, goes up, comes down, makes a three-wave pattern here, right? So all these patterns which I'm talking about is available in the Elite Way Master course. That is also available on YouTube. Definitely do have a look at it. Here, after a three-wave pattern, what happens is market goes very sharply higher. Now, question is, when market starts with a three-wave pattern on the downside or upside anywhere, there is expected to be a retracement. Here the catch is what? What is the catch? In this structure here, there's a good chance this can be your wave W, this can be a wave X, and this can be a wave Y, right? One of the scenarios. What is the second scenario? Second scenario is that this is your wave A, irregular flat B, okay? Irregular flat B, and then a sharp dump in the market as wave C. These are the two bearish scenarios after the budget on Saturday. What market did was it gave a gap down. Now, I had this poll up in my Telegram group, right? The Retail Army Telegram group. What positions were you carrying? So most majority were bullish, right? Those who voted for, they were carrying some positions. From those who voted for positions carry, most of them were bullish. What did the market do? Gap down. So it is very clear that knowledge of market structure is very, very important. Same thing happened, I think, last week here at this point, right? At this point here, I had asked the same question Friday. What positions are you carrying over the weekend? So many were again bullish there. Mostly those who voted, they were all bullish. The reason is everyone's looking for a buy on dip scenario, and every Tom, Dick, and Harry on social media were convinced that the bottom is done, market is going up, so on and so forth. What did the market do? Second half flush down and also gap down afterwards on Monday, next day. Simple as that. A small message I gave today morning in the Telegram group was about a trap candle. If you see this candle here, this is also just like a trap candle. Here what has happened was there was high amount of selling and market closed red candle, right? What happened right after that? Market bounced back higher as usual. Normal price action happened, no issues with that. This is like a trap candle, but this is not a trap candle. Now in today's price action, if you take a 15-minute chart, I told in the morning session that this first candle of today is a trap candle. Now what is the meaning of this trap candle? Trap candle is nothing but here there was a hell amount of shots, like crazy amount of shots happened in this candle. Now the question is, if such crazy amount of shots happened, why did the market not fall? Why did the market start go sideways or start stagnant or whatever? Why is the market doing this? The reason is very simple. These are not shots of bears. These are shots of bulls, stop loss hits, right? So bulls, what do? They take an entry, they take long, the stop loss, if it triggers a sell order, correct? This is, I think, common sense and everyone knows this, but again, just to clarify. Here what has happened is a lot of stop orders got hit. Okay, a lot of trap. This is a trap candle. And what happened here? Heavy selling happened in this first 15-minute zone, but candle closed in green. So this, somebody has been trapped very badly in this place here. Now, not only that, not only bulls stop getting triggered, there is someone who can wait or place a limit order when this market breaks this low. Someone wants to sell the market. When the market breaks this low, they also have entered, they also have got trapped, right? So this both scenarios got trapped in the first 15 minutes of today. That's why I said today is a trap candle. Mark this range is very, very important. Now, how do we use this? So these kind of candles, what market does is, where does it form? I'll tell you. I'll tell you where exactly. If the market is moving down like this, a trap candle forms here. Okay. Goes up higher and it comes back to this trap candle zone. This is one of the scenario. Another scenario is market is already moving in some direction, retraces here, makes a trap candle and goes higher. So what is something common between that? These two is that you can see in the second scenario, this is the second scenario, before the next move starts, okay, before the next move starts, there's a trap candle just before the next move starts. In the first scenario, if you see, before, sorry, this is first in the first scenario, when the first move ends, there's a trap candle. There's a difference here. Let me redraw it so you'll understand it much clearer. The second scenario, trap candle here and then fall. Okay, so there's a clear difference you can see. First scenario, trap candle comes here when this move finishes. But when this move finishes, there's a trap candle. In the second scenario, when the next move is going to start, there's a trap candle. All right. So these are the two different scenarios where trap candles happen, and price always refers back to that. Okay. Price always refers back to that. Meaning, if in this case, what happened is price came back into the trap candle zone. In the second case, what happened? Second case, what will happen is price will come back once again to retest this trap candle zone. Now, applying this concept in our now, first, before you go and ask me how to identify trap candles, this is something of my own private research, volume analysis, which I do. And this is not yet available in the public. It will be available soon when I start volume analysis courses on YouTube. Everything will be on YouTube only. Don't worry about it. Right. So that you can apply it and you will understand. It's kind of deep study. Without the understanding of price, you won't understand volume analysis. There are a few examples which I've shared in the main channel. Right. This is the main channel, and you can see under the section of volume analysis, there are some trap videos, all that you can understand there. Anyway, so if this is one move, right, if this is one move and we are going to see another pullback, if this is a trap candle here, and if there's a pullback like this, the next phase will always come back to this trap candle. So this is one of the idea which I'm sharing here. This is one of the idea. Let's confirm this with the price action here. Let's confirm this with the price action on a smaller time frame. If you look at the smaller time frame here, what has happened is price has moved up from the bottom of the day, right? From the bottom of the price has moved up, three-wave pattern, drop, the next three-wave pattern, right? Now, why am I saying this is not an impulse? I'll tell you. A sharp fall. Here, price is going stagnant. Obviously, we know whatever happens here, market has to come back to this zone, right? If market goes sideways, goes up, it will definitely once again come back and retest this zone of today's, right? The lower part. This is one guarantee we have. Looking at the futures chart, what I want to show you is very simple. Nifty futures chart. Before I go into the futures chart, let me just go to 1 minute chart of today. I'll show you more clearly. This second half fall which came here, right? This fall here, what has happened is very simple. When I tell you that you should always consider for a continuation pattern, 38 to 50% zone. Here, if you see what happened to the 38 to 50% zone, it got breached, right? It got breached. But if you see clearly, just holding it slightly it's holding there, and price bounced again. It is in a sideways pattern so far. It can go higher, no problem with that. Same thing if you look at, this is why I told you that this is why if you look at the futures chart here, look at what happened in the second half. This is not a 38-50% retracement. It is almost retraced more than 78%, right? Whatever move came here, whatever move came here, it is like a pump and it fell down here. Now, which waves gives us pump scenarios? Wave 5s or wave C, right? So one of these wave has to be here for this pump scenario. So if this is wave C, then this is your wave A, B, and C. Simple as that. Same thing if you apply a Nifty spot chart. If you applied a Nifty spot chart, if this is your ABC pattern, what have I told you? That a big bullish move or a big reversal cannot start with a 3-wave pattern. It has to come back here. Now, coming to the analysis of this week. Before that, let me just go to higher time frame once. I'll show you the move which started all the way from December, right? Either it's finished or this is your wave A. You can consider here or here, does not matter. If you're taking this as B or wave X, this is W or wave A. Fall as wave Y or wave C, whatever you want to consider, right? And then if you want to consider this as a fresh wave on top, how do we read that and what are the possibilities on a smaller time frame? For that, we'll require what? One small dip again once and then bounce higher like this. This is a clear-cut understanding we have right now. Much more further, if you go back one more step higher on a daily time frame, if this is going to be a diagonal pattern, which most likely it won't, but still we are keeping it in mind. If this is going to be a diagonal pattern, then market will most likely give a smaller pullback higher once and then a drop further, right? This is the most likely scenario in the market on a higher time frame. If it's a diagonal pattern also, regardless of any other pattern, if it's not a diagonal pattern and you're considering this as a W, X, this will be a YA, YB, YC on the downside. Okay, so we'll complete Y, or else if you're considering this as an X wave and you're expecting another X wave here and fast fall down as wave Z, no issues with that. The only problem here is that it has to be very fast, right? X wave type like this. It has to be like this, fast. It cannot be slow and doing time pass here. It has to be fast. If it's slow and doing time pass, we'll consider this as some sort of a B wave, some sort of an A wave, and then C. So higher time frame, there's a lot of possibilities here. So we'll discuss that in some other video. But right now, for this week, what I'm looking at is very simple. Let me take this off. We'll break it down, guys. Now, first, going back to our original time analysis, your time cycles, what happened here? We are currently in one of the major time cycles. This is a 1 hour chart. You can zoom out and see 1 day chart. Let me see how it looks like. All these dates have already been shared on YouTube. So just watch the time cycles video again. I'm going back down to a 1 hour chart for more clarity in price action. So the first minor, not so significant time zone was here. What happened here? Market made a range, slightly breached the range. It was an ABC pattern, very clear cut, and we saw a fall. All that captured, done. Here, what happened? Okay, so we started this after the 27th, right? After the 27th of Jan, we started the second. This is the major time cycle, which is still going on. There are two confluences I told you. It is still running till the 6th, the 5th, right? To 5th. So we have to consider tomorrow, just 4th full day also you have to consider. The natural projection or a normal cycle means here we're expecting H means high as per time cycle, as per normal time cycle. Now, what is inversion time cycle? I've told you this before. Something which we cannot predict is that when you're expecting time cycle is telling you something, suppose high, but exact opposite happens in the exact same day, meaning in case high is not made and market makes a low here and at the same time, it's called inversion. Okay, exact opposite happens, right? We cannot predict this. This is one of the tricks. I call this, this is the quote I gave it. I call it the trick of time. We cannot predict this. If it happens, we have to deal with it in the live market, right? So right now, the question we can ask is whether market has made an inversion and given a big rally, or market has made a new high here and we are going to see a fall. These are the two questions we have right now, right? We have to answer them And to help that, we need to understand smaller price structure which is happening here. Since market gave a single side move like this, and it is not crystal clear, okay, this move is not crystal clear of the internal wave. So what we have to do is now we'll break it down. We'll break down the structure slowly. We'll follow little by little as long as we are clear with what we see. For example, what I'm trying to tell you is you're trying to see far away, like 100 meters. It's not clear for you. Your vision is a little blurry. Okay. What you're going to do is you'll walk 10 meters, turn on the light again, check everything is fine or not. Can you see 10 meters in front of you or not? Okay, that is what we're going to do. Again, we'll walk 10 meters. Again, we'll turn, see, check everything again. We'll do that. So what we're doing is instead of only keeping our vision on a higher time frame, we'll keep it on a lower time frame now. We'll try to understand what exactly is happening. We have an idea of what is happening, but again, we'll check slowly, slowly, slowly what is actually happening in the structure. Now, I told you here, time cycle wise, on a smaller scale, very small time cycle, fourth is important for a swing this week. Okay. So we'll wait for tomorrow's price action. What we can expect is one of these two things, fourth, and the next date is seventh, right? If fourth gives us a swing high like this, okay, if we get a swing high on fourth, we can expect a move down till seventh. This is first scenario. Next scenario is very simple. If we get a move down continuously on fourth, after confirmation, we can expect a pullback on top towards seventh, right? So these are the two ideas we have now. Now this is as per time. Let's look at the price. Price wise, I've told you that we found a trap candle here. No matter where price goes, it will come back to test this zone once. Understood? Done. If you look at this pullback here, I told you it's a three-wave pattern. So we know that price is going to fall back down to this zone here very clearly. When we know this is going to happen, are we going to plan huge long side? No, we cannot plan big long side right now at the moment because of this pattern, right? It's a three-wave startup pattern. So what we can do at the most right now for this week is till your weekly time zone, which is near the 6th morning, till then it is better to stick with intraday only. This month is going to be very slow, very favorable for option sellers. Option buyers need to have, let's say, a very smart plan. You can't simply go in and mark some levels and some trade. You have to be very sharp with your levels. This week, especially, is going to be tricky. After this week, if this week is clear for us, then after that, we can solve the entire month problem. But right now, we have to be patient and watch what market does. It is not going to be easy this month. The trick of February month is actually very simple. There are only three zones, which I call this is what I think happens. Right. So this is the start of Feb. This is the end of Feb. This is the middle of Feb. Here, here there's something major that happens. Now this is bonus. What is in the middle of Feb? Something which everyone celebrates is Valentine's Day. Right. So near Valentine's Day, something happens either in the exact start of Feb or exact end of Feb. Right? These are the areas of price. In between, mostly it's time pass. February month itself is usually one of the months which triggers a correction in the market of the current trend. So suppose current trend is bullish, it triggers a correction, right? If current trend is bearish, it triggers some kind of a correction. So usually these kind of corrective moves, either they're sideways like this or they are pullbacks in the market, whatever. Anyway, so regardless of time frame, this is what happens in Feb usually. If that is the case here, then we are expecting a very painful, slow move to come in Feb. It is definitely going to hunt both sides SL. It is definitely going to play a choppy role here. So overall structure, what do I see so far in Feb month is not complex, but something which we have to be very careful of is if market does this, one of the scenarios goes back higher and comes back down. This is one of the scenarios. The next scenario is that the higher time frame which we discussed, right? The higher time frame scenario which we discussed earlier, this one, and it completes some high by your third week of Feb, approximately there, and then market triggers a new move towards the end of March. Right, this is your A, B, C, D, E. Right, middle of March, end of March, whatever. This is another scenario. So these are the two scenarios which I'm holding on a higher time frame. This is not confirmed yet because we have to see how Feb turns out. Right, if this is your wave A and we are in some complex wave B, it can be like this also. A triangle pattern, anything can happen. So we know this month is going to be tricky. And when you know this month is going to be hard for especially option buyers and trend followers, what you must do is play conservative, play safe, right? This is what you have to do. I'll keep you updated, guys. Follow me live in the Telegram group. All the updates will come there. Looking at intraday today, it's very simple. What happened was first time zone, no level was touched, right? No level touched, so no vibration level. Second time zone, we had exactly 23,340 level touched. Price did a very tricky maneuver here. It went up and came down here. Those who follow only level, it's very difficult for you. Those who are following only levels, meaning enter when the price breaks down, and again, you if it breaks up on the upside, again you have to take an entry, right? Again it breaks down, you have to take an entry down. So this is very tricky for those who follow only price. Those who follow market structure, you know that you have to look for a short side setup, because if you look at this 1 minute chart, if you look at a 1 minute chart, this was very simple. This fall here was, it is tricky here at this point. When price touched this level here, right, it's very simple that it's going for only for a pullback. Market was going to fall back down. This is for sure. 1 minute chart is really hard for some people. I don't expect everyone to learn it. Advanced concept members, it'll be a little bit easier for you because you know how to read price with all the indicators we have. ABC pattern, sure. Fast move up, sure. 38 to 50% you're expecting. Market gives the pullback. It is not impulsive because it is very choppy and slow, right? So once it's choppy and slow, you understand this is wave A, wave B, and wave C, right? So pump. So this was a dump, and market came exactly to the point where it started. So this is what I've taught you guys before. If there's a pump or a dump, from where it started, market will definitely come back to the starting point. All right. So last week, what happened? Last week, if I have the data, I don't think I have it. Okay, this is last week's chart. Exactly at the bottom, we had the weekly time zone. Again, I have to apologize to all the swing traders who are following the swing levels. I mentioned that I will update these levels in the Telegram group, but I forgot most likely. And later in the midweek, when I checked the levels again, it was a perfect bottom. And the vibration level here, we had nearly the entire rally, 800 plus points, 700, 750 plus points move in the market from our level, vibration level. It was a single one-way move. And yes, I updated this in the Telegram also, that I am sorry for not updating these levels. Perfect move. This is one of the perfect moves in the market. Exact bottom, at exact bottom of the week in our time zone, and then one-way move, right? So what I've done is first thing I've done is I've updated the weekly levels in the Telegram group with the time zone. This week we don't want to miss if this market is presenting us such an opportunity. All right. I'll see you in the next video, guys. Till then, take care and be safe. I hope this provides some clarity to you going forward, and make sure to be careful in the Feb month. It's going to be a little dangerous out there.